Good evening, ladies and gentlemen. Today is the 20th of October. Today is the Wednesday before the weekly expiry, and generally, Wednesdays offer very good risk to reward because it means that a lot of these options are going to go to zero the next day. So, invariably, they will lose a lot of their premium. Despite that, there is also one particular change, which is that suddenly, after having a steady one-way move, market has sort of taken a breather and you're seeing some kind of profit booking. And overall, broader market itself, a lot of negativity. So that would always keep people on their toes with respect to running away if they have short put options or getting rid of long positions. So being aware of that, I kept my position as risk averse as possible from the beginning. I was trailing with an extremely tight stop loss of 2 points and then eventually 1 point. The entire second half I was trailing with 1 point stop loss. And more or less, I was very happy with how I managed it, and I managed to keep my mark to market very steady the entire day. And yeah, the problem is not when we have like a one-sided move. If we have an entire day of lower highs and lower lows, it's very easy to manage such a kind of a day, even if there is like a steady spiking of IV, because you're not having to fight a battle on two fronts at once. So it's never a problem. The problem always comes when there's momentum. When there's a quick move in one direction, a quick reversal in the other direction, that's when you're going to have a problem. So all said and done, it was a good day. I was happy with how I managed it. And I got a couple of messages today from people saying that, non-directional trading intraday lately has been like super difficult and not very lucrative. Yes, that's true. In the past 2 months, I mean, it depends. It could have worked out all right only. I don't see any reason why anyone should be in the deep negative if they were managing their risk properly. When things are not going in your favor, cut sides. It's that simple. You're trading X, trade X by 3. Keep your risk reward framework much lower. Keep your risk tolerance much lower. Like manage your risk in such a way that previously, while you might have been going for, you want to capture 20 points and you're willing to give up 10, instead try to go for, say, can you capture 10 and give up if you do about 5? Like there will be times when obviously you won't be able to execute that. But go for smaller trades, go for smaller risk rewards. And one more thing that I find some people like, like option selling is not working for me. I will switch to option buying because daily we're getting 100 point moves. The thing is, while it might work once in a while, it most likely will not work in the longer term. If you just decide I'm just going to switch my trading style and do something else altogether, you'll make mistakes because you have not practiced it. You don't know how you'll react emotionally. You don't know the perfect way to enter and exit. There are so many aspects to a strategy, right? Not just with respect to its execution, but also with respect to what you're feeling. So I would recommend you don't do that. You can, if you want to try out new stuff, do it at like minimalist sizing, like get good confidence in it and then roll it out. But otherwise, right now, at any point of time, market has phases, right? No 3 months in the market will ever be exactly the same. The behavior of all the instruments in the market, it varies. Every quarter to quarter, you would not even be able to recognize how different it is. So in a particular phase, if it is not working for you, just cut down size, cut down risk, take a chill pill. Don't try to push it. Don't try to force it, and never do the mistake of, I'm seeing a lot of these people who take huge intraday risk and then they're making a loss. And what they do is they actually end up carrying a ridiculously leveraged position overnight which is like on steroids with hedging benefit, and they're carrying it overnight hoping it works out. Most of the time it will work out. When it doesn't work out, it'll be very dangerous. So I deeply suggest you always think of your trading career as a long-term thing and don't try to get into this mentality of, I've lost money, let me make it back and whatnot. So anyway, I hope you had a good trading day. I will catch you for the expiry tomorrow. Take care.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:26. We opened initially flat for the day, but after opening flat, we saw pretty much a sell-off across everything with considerable selling, almost 100 points dip right at the open. My idea is that this particular swing high, now that we showed a little bit of weakness, and after this rejection and after this continued sell-off towards the second half of today, has seen a tremendous amount of call writing, 18,600 and above, and should be a relatively safe strike. And on the downside, I've kept a little bit of room all the way till about 18,100, where I have my sold put strike. In case we start taking out the day's high at any point, then I will be adjusting for my calls just about 20 to 30 points before my day's high is taken out. Until then, I will retain this position. Currently, I have a 500 point strangle. I initially started with my calls a little bit further away, but had to move it closer into the down move. And basically, more or less, the idea is this position most likely could give up anywhere between 15 points to 20 points, depending on where we close on the market. And potentially, I can take up to 8-point stop loss. So that is the plan for the day. And yeah, right into the open, quite a bit of a sell-off. But being a Wednesday, it should be in favor of people who are taking credit side trades. So I'll keep you posted. As of now, I am 250 points away on either of my strikes, and they're trading for a good 20 rupees. And ideally, this is where we close for the day. I can expect this to be trading at 10 rupees each or lower. So we'll keep you posted. The time is 9:28. Okay, one change that I've made is I've taken 1/3 of these call options and moved them lower. The reason for that is into the open, there has been pretty large amount of call shorting on intraday basis. There are a lot of straddles building around this 18,400 mark, but clearly there is far more call writing than there is put writing. And from an overall perspective as well, the range for the expiry that seems to make sense at this point of time is 18,300 to 18,500. But however, if for whatever reason we hold at the high levels, then there could be a short covering pulling us back to 18,500, and that would completely change the structure of how the OI looks. So the threat of an explosive move is definitely on the upside, which is why I'm more concerned about these calls blowing up than these puts blowing up. And the idea is as we start to test the day's high, I will move another 1/3 quantity to 18,650 and then the remaining, so that I'm not exposed to some kind of aggressive short covering on the upside. So as things stand, things are more or less fine, and currently half a point down. But given that we opened gap up and then got sold off 100 points and have pulled back 50 points, it's more or less expected. I've got an entire day left to go, so we'll keep you posted. One more thing. So in terms of how the rest of the positions are looking, this HDFC covered call more or less looks like whatever is remaining of its value will be given up. HDFC Bank, as of now, my call is just about 25 points out of the money. There are a lot of calls written at the same strike of 1,700. And for now, it's fine. I'm not going to be doing anything there. ICICI Bank, 50 points still out of the money. So given that the market has taken a halt at the high levels, I feel like these call options will slowly start giving up all their value. ITC yesterday, after that big down move, my position has benefited very well because against 3,800 shares, I've actually sold 6,400 quantity of calls, one in this month, which now almost certainly will expire worthless, and one in the next month, which also has given up about 30% of its value. Larsen, after that big 3.5% move yesterday, has put this particular call in a slight negative, but it still got 60 points. So not of a concern. All these covered call positions are covered in shares, so not too much of a concern. Same here, given up 70% of its value. This Reliance position, Reliance more or less give take is actually outperforming the market because its results are coming up despite all the volatility yesterday. There really wasn't that much of a move within Reliance itself. And as of now, this position is at negative 1 lakh, but the shares have benefited immensely because Reliance made such a big up move. This position, once there is an IV crush from the results happening, will most likely come into the green. In case there's some big move, then I will have to make adjustments against this position. Position hasn't been giving any fall off in premium at all, simply because premiums continue to remain high as we approach the results. As soon as the results are done, there should be quite a substantial IV crush. I also had one Zeal trade, which I booked yesterday at 5%. So I closed that yesterday. Zeal was perfectly centered around my in-flight, giving me 5% return in about 2 trading days. So I closed that. Yeah, we'll keep you posted. Time is almost done. Okay, so that exact situation started to come to fruition. wherein we are now holding very close to the day's high, and the shorts that were built up starting to get covered. This 18600 more likely to put on quite a bit of value, which is why I have squared it off and moved all my calls to 18650. Now, if we continue to head higher, take out the day's high, then once again it will be the same thing. Square this off and roll it higher to 18700, as in when this starts to reach about 1920. So that's the plan. We'll keep you posted. Time is 10 o'clock. The time is 12:30. We're at the halfway point, and basically it has been an interesting day. So here I had to keep my calls quite low to protect against some kind of a cascading down move. Into the up move, I had to shift my calls back up to protect against short covering. Kept a relatively negative delta. So into the down move was okay till about here. And here, as we started testing the day's low, I squared off my 18100 puts at about 14 and a half in that range. So that worked out all right. And I rolled them down to this 18,000 put strike. The idea basically was that I will be trailing my mark-to-market exit from here of about 3 points. The reason for that is I don't see the 650 point strangle closing for anything more than 14-15 by the end of the day. And more or less into the kind of IV spike that we had, I completely avoided getting burnt by this and by staying here. And yeah, right now I'm trailing my stop loss by about 3 points. So more or less close to cost, is slightly better than cost, will be where I'm trailing my exit to. And something interesting to also note at the same time is this particular Reliance position. Now this Reliance position has been centered around my strike for a very long time, but the IV of Reliance continues to keep going higher, where both the put options and the call options are gaining. So for context, this 2700 straddle, which is the center leg of the position, which I entered almost a week back, is into the IV spike of the down move that we just saw, even though we were perfectly centered, was actually at a negative. So we had an entire week of rising IV on Reliance, and that is more or less what is happening here. The results have to come for that IV to get crushed. There's really not much else. And as of now, things look good. I'm not going to be making any further changes to this position. I'm expecting that range of 18,300 to 18,500 will more or less hold, and that will lead to this position closing at somewhere around 14 to 15, best case scenario. Okay, so the expectation for the day is more or less met, and the cooling of IV, basically what has ended up happening is this 650 point strangle is now trading for a little bit more than 13, about 13 and a half. From here, my idea will be I'll be trailing the 1 point stop loss, so not much more than that. Basically 20,000, 1,30,000 is the point at which I will say thank you very much and call it a day. So it's been relatively a straightforward day. At no point did my mark-to-market really slip into the red after the entry. It's also been a very sideways day, but if I was closer to the money, it would have been a headache, because at different points there was spiking of this put option price without much of a cooling in the call option price. So that would have been there, but managed to keep taking risk off each time, and overall a smooth kind of day. Yeah, we'll keep you posted. As of now, the time is 1:16, and we've still got 2 hours left to go. And depending on how much of an IV crush there is, or what kind of from here, this position could lose further, easily about 2 to 3 points if we just hold range, or it might not lose anything at all, which is why I'm trailing quite a tight stop loss. Okay, people are going to curse me for this, but my trailing stop loss is hitting, so I am going to take the exit. Yes, the position will lose more from here, I'm sure. Oh, wait. I'll execute this in MIS and then I'll change the position. Okay, the reason I've exited is because I was trailing by 1 point stop loss, and that 1 point is hitting, and I don't want to deal with so we're breaking the day's low, and that is going to lead to a spike in the put options. And I don't want to have to deal with that, because there won't be any compensation from my call unless I rolled my call down lower, and I have no intention of doing that. So that's more or less it. So now it depends. If we have some kind of a runoff move from here, it can be quite painful because people would have had positions initially around 18,500, then they built around 18,400, now 18,300. Even at the money straddle has quite a large amount of premium in it. If this expands to about 11,12, if the 18,000 put option goes to 11,12, then I will consider re-entry through the 18,000 and 18,600 because the call has not given up too much value into the last 2 points of expansion. That doesn't happen, then more or less that's calling it a day right there. We'll keep you posted. The time is 1:30. Basically, I'm trying to wait for a spike in premiums so that I can get the same spread for a little bit better price. And from there, I can probably trail another 2 point stop loss. Okay, some major lag situation. But basically, what I'm doing here is entering a little wider of a position at 17,900 and 18,650, giving me 750 points, just to deal with the fact that these super OTM will probably cool down further by the close, and I will have a 1 point stop loss for this. I entered for about 10 rupees 50 paisa, and my idea will be to exit also just about there in 1 rupee, 11 rupee 50 paisa. I will exit. Yeah, so pretty straightforward. More or less entering while the spread is trading exactly where it was when I exited. In fact, slightly better. When I exited, this particular spread was trading at 9 rupees something. Now it's trading a little bit more than 10 rupees. And my idea is that it should probably can give up easily 1 or 2 points by the close, and I will have a 1 point exit, which would be very difficult to actually make it happen. But yeah, 1 point is my exit on this. The time is 2:53, and we've kind of taken support at this 18,200 level, and from there some amount of pulling back into the up move. I don't expect these calls to gain too much, and from here, from my current mark to market that I'm at, I will be trailing by another 1 point. It's been an entire day of trailing by 1 or 2 points max, so staying as risk averse as is humanly possible. And yeah, we'll keep you posted. Potentially there could be a little bit more fall off from here as well. Keep you posted. Time is 2:53. If we pull back all the way to 18,300, that might lead to a little bit of covering on this call, but as of now I'm not very concerned about it. Okay, exiting my position now. I'll go over why. Try to exit with a better limit. Okay, done. So the reason I've exited is because so now that this pullback to 18,300 is happening, there is a good cooling of put option prices, and I'm not expecting, for example, the 17,900 to go too much below 3. I'm not expecting it to go too much below 3. It's not going to lose too much value, but this call option will definitely gain. So if you see with slippage and all that at what price point I've exited, technically wanted to get it an exit 75 paisa better than this, but yeah, that's not going to happen. So at this point, this call option can gain the 18,600 with anticipation of this is a strong enough pullback in the last 10-15 minutes. It can gain, whereas the put option can't really lose much. And even if we hold at these levels, potentially it's not going to fall off too much. So the risk reward beyond this is not going to be great. So that's more or less reason to call it. And I think also I'm quite happy with how the day went, considering that we had relatively we opened gap up, lost 100 points, put on more than that, and then from there made a steady 250 point move onto the downside. So all that's said and done, being a Wednesday, I'm quite happy with the outcome. So that should be about it. Tomorrow expiry, let's see what kind of data builds up. As of now, from what I can see, the advanced decline, broader market, everything quite in the red, huge amount of call shorting taking place. We'll have to see where we open tomorrow and what trade would make sense in that situation. Thank you so much for watching. I hope you had a good trading day. I'll catch you.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.